Hi, welcome to this week's edition of Lessons from Winners and Losers for the week ending 16th of March 2024. My name is Emmanuel Ekpeyong, and I'm so excited to be with you again. This week will be a bumper edition with a lot of interesting stuff, so stick around. But first, it's important to remind you of a disclaimer. Do take time to go through them carefully, right? Let's go to the interesting stuff. Again, let's start with the winners. Which stock won big last week? First is Oracle Corporation with ticker symbol ORCL. This company won 11% in 5 trading days. Really impressive, as you can see, based off on a very good earnings, and then power really high, but could not hold and then retrace a bit and then close, but then climb back to close the week at 125 area. A very interesting point. Again, blast through previous resistance. That was a signal to buy, and then it would have, made yourself some decent gain. But let's continue. We will talk about lessons later, but that was the first stock that won really big last week. Second company that won big was Marathon Oil, an oil and gas company, won 6.2% last week. For those who have been following our series, we know how we place so much importance on key areas of resistance and support. And when this crossed the 24 area, perhaps it was a signal to go long. And if you did that, you would have made yourself some decent gain. We'll come back to see a few things we could learn in this stock. But let's talk about the losers. Just one loser this week. Advanced Micro Devices is a popular company in this semiconductor industry. This lost 7.8% last week. Wow. I highlighted a few things here for you. Look at the chart pattern here to see very telltale signs of reversals. Look at the candles. These are very typical signs of a stock when the price has sort of run out of steam, and then it went through the support area, and then luckily retraces back. Otherwise, it would have lost even more last week. So, what can we learn from these three stocks? Okay, the key thing that I want to talk about first is sector rotation. So, sector rotation. We can see that this week the oil and gas came to the party. MRO, not just Marathon Oil, Corn Oil, many oil companies did well this week, which is different because in previous weeks, they were not doing that well. So, and it's very important, guys, for you to realize that money can move from one sector to the other. Some weeks, even months, some sector may have the love of investors in the market, and sometimes they may not have so much love. So you need to know which sector is on the uptrend, which one is on the downtrend. And this week, we saw oil and gas company doing well. But on the flip side, the semiconductor industry that has been doing really well in the last few weeks and months is on the downtrend. But that is understandable. You can see that this thing has been making an impressive run in the last few weeks, and it's only natural that they will take a break. So that's important. The other one was reversion candle. How do you know when a stock is about to retrace from its upward movement in terms of stock price? Let's look at AMD. Like I mentioned earlier, you can see the stock, the candlestick here was not very convincing, particularly this one. This long wick showed that price had moved up this far, but all that was lost in intraday. It's a very big signal to tell you that something was happening. And even then, before that, you see these 2 days, the way the candlestick is. Compare that to this kind of convincing candle, full body candle, showing a lot of conviction. We'll talk about candlestick pattern and how to interpret them in subsequent videos. So if you have not subscribed, you will do it, because I do have a lot of interesting stuff to cover. I just love this stuff. So reversal pattern was important. And again, this happened around former support area. So you did not only have this reversal pattern in terms of candlestick, which was a warning sign, but you also saw that this happened around area of support. So when you went through, you would have been out of this stock and then save yourself if you were a short-term trader. The last thing I wanted to talk about that we can see from this week's review is the importance of psychological zones. I call it psychological zones, so areas of resistance and support. If you can correctly spot these areas and know how to respond to take decisions around this area, I'm sure you will do well. Let's go and see how that plays out in the stocks I've reviewed. So first, Oracle, we saw the bit of consolidation here, but here was quite obvious, a previous area of resistance. And when this blasted through, powered by good earning, would have been a time to get in on this stock if you were sort of watching out for the stock. And so it's important to recognize this area. I call them psychological zones because everyone is watching those areas, and what happened around that area is very important. So it's either there's a lot of conviction and the stock price moves through this resistance area, or there's not enough conviction and the stock price is rejected. Simple. So you can use that therefore to decide also to get in into the stock or to get out of the stock. So we saw that in Oracle, also again in Marathon Oil. You can see the area around 24 was previous resistance. As it powered through there, would have been a good time to enter. And also above the 50-day exponential moving average. We will talk about moving average also in our future editions. But it's very important, when you see this combination of signals, then you have a lot more conviction. Above 50 exponential moving the average is in itself very important, but doing that around where the price just move up above a former resistance area gives you double convictions. Psychological zones are important. Okay, now that was all I have for you. I hope you can take all this into consideration as you analyze your stocks and prepare for next week. I wish you a restful weekend and a successful trading week. Ciao.